Hello fellas, this is theSpringHunter and today I present you my fifth blog post in the form actually of a video recording. I decided instead of writing you a post with some explanation that you can find in the blog post so far um, to record something because I spotted something in the market that might be interesting for you. If you haven't checked so far the blog, it's theSpringHunter.com. This is the place where I share my observations about the market, some findings. I'll share my way of trading, and more or less that will be my place for communicating some insights about everything related to trading, for day trading, swing trading, and all the things I do. Currently, what I wanted to show you is the following thing. As part of my weekly process, I always monitor what's happening in the S&P index. And as you know, lately S&P is under the pressure, especially after the last week's news about the attack from Iran to Israel. What happened so far? So we might say on the daily chart that we were running in a very solid uptrend. The 20 MA was acting as a great support. We almost hit something like spike and channel because I do believe if you use your wonderful imagination, you'll notice that this was kind of a channel. Okay, if that was being respected very well. So on the smaller time frames, when you go there, for example, for our charts, as you see, price was pretty nicely bouncing from these areas. So literally every time that the price was coming to my longer term EMAs, uh, which the green line is 89, price was bouncing. Price was bouncing. So more or less we were in this kind of channel. Lately we broke from this one. Broke from this one once there was a test. Now we break down again, and we have some room for some corrective activity here. But something that I wanted to point out. Um, on the downside, there is something which is very evident. At the moment, definitely we can draw some kind of a trend line from here to here. Okay. I like to use the bodies, not the tops, although you have to be conscious that trend lines are never aligned. There is some zone. But let's say we have this kind of a channel down where the price is coming, and we have this channeling activity. So what happens very often in S&P and what can be observed on the long side, also on the short side. Just delete this previous channel so it's more visible for you. Very often in the S&P index, price retraces after an impulsive move like this one. So this impulsive move, this impulsive move, this impulsive move. So after a directional move, when you have a trending move, the retracement goes exactly to 78% level. As you see, almost to the tick, it came to a 78% retracement level. That was the open, took it, went down aggressively. On the next day, not on the next day, but on the next move like that, this down to the tick, 78%, 78% to the tick. Came here, middle of the day, drop down, then reverse up to here, and then once again, 78% retracement level, guys. So this angle at the moment at which the price is running, I'm not sure exactly at what that angle is or how to check it actually, but never mind. Let's say it's kind of 30 to 40% angle. It's not 45. It's at the moment perfect for shorting at 78% retracement level. As you see, price is nicely recovering at the moment from this line. So we might expect it to come somewhere around this line, this trending line, but also knowing what happened the previous 3 times, we can expect the price to reach the 78% retracement level around that level or here somewhere, and then to come back down. I'm personally positioned today with literally an order around this level. Stop is above the previous stop, okay? I'm trading it in a similar fashion how I trade the Gartley. The Gartley is pretty much a pattern where you have impulse move down, and then you have some correction in the form of AB equals CD, okay? And this leg, which is the second one up of the corrective activity, the Gartley is saying that it should be around the 78% retracement level. I'll cover the Gartley in a you know in another video or in depth, but this is how we do it. So S&P is awesome for using the 78% retracement level. And let's show you something why it's so awesome, because folks, from here you have at least 1 to 3 risk to reward. Let me show it to you. Pick a measuring tool for shorting position. Imagine you shorted here with stop above the previous stop, target was down here, you have 3, 4. Okay, next one, you short here at the level, stop above the top, target is down at the previous low, not getting too greedy, exactly 3.48. The next one will be absolutely the same because just of the symmetry of the markets. So 78% retracement level, I don't know if Fibonacci works because of some magic, because of some harmony, of some vibration, doesn't matter so much, but it's a great place where you can enter and have a trade with minimum risk and maximum reward. And 1 to 3 is great ratio, guys. I mean, you don't have to be um, right so often benefit from it. Okay, so around the 78% retracement levels, I'm definitely shorting it. Also, 55 EMA will be serving as a pressure point. Okay, 89 is here, so all good. Before continuing further, I just want to tell you something. I'm using the 21 EMA, 55 EMA, and 89 SMA, and when they cross, this is called the bow tie, and north of the bow tie, I'm long. South of the bow tie, I'm searching for shorts. So this is even if here the first one I was not inclined to take it because I was still looking for long positions. Here I was already down from the bow tie. I was searching for reasons to go short. That was a great idea to go short. That was another great idea to go short. Plus you had this very nice pin bar. I mean, if you're waiting for some confirmation, folks, here you had your pin bar. Um, which is awesome one. Here, if you were waiting for confirmation, you were going to miss the move. Here, you didn't have much of a confirmation in that bar. So 78% retracement, I'm just going to short it this time. That would be my outlook. I have no idea what will happen. It's pretty dynamic in the markets this week. Any news might trigger going long or short, but I believe it's still uncertain. So I'm inclined toward this short side in the near term. Also, something else to notice, guys. Here, before the last gap here, the volume dried down. You see previously the volume was pretty high, and then here volume dried up. I actually had a position a little bit longer term oriented. I bought some ETF who is following the S&P, but I noticed that actually the volume is just drying down. I mean, we were nowhere near. See, here we were nowhere near previous volume, and even this bull bar was not, presenting with anything interesting. So I was a bit lucky, but I exited somewhere around here my a little bit longer term position. And when I say a bit longer term position, I was riding this move with some long term investment. It's literally investment, not trade somewhere from here. I was just accumulating a little bit of shares of an ETF around here, and around that level, I felt some urge to exit. I was seeing that volume is drying down, which is typically a precursor to a little bit of bigger correction. That might be a small correction in a bigger uptrend. Just be conscious about it. It might be an AB equal CD move, A, B, C, and now wedge, kind of a wedge, and we can continue forward. But I think we're going to consolidate a little bit or to have some kind of a choppiness here around these levels before definite break in the upward direction. Okay, but my today trade is, as I mentioned, I'm monitoring for a short from these levels here to here, and they might come here now at the open very quickly. After the open, the moves are very sharp. Speaking about the 78% retracement, I want to show you. I know I have the benefit of the hindsight, definitely. Don't argue about that, but have in mind the 78% retracement is working just fine. Find a good move in one direction, pick it up, find the 78% retracement. Here, that was your 78% entry point. That probably here was 61. Typically 61 or 78. But yeah, currently, if you were monitoring for 78 and you saw this big pin bar on fairly okay volume, uh, that's reason to go long if you're using the 4-hour chart or something above. Here, buying the level worked out. Here, buying the 78% worked out again. You know, um, literally, you have multiple situations where the 78 is just working. If you buy it here, 78 with stop here, we were trigger. You were gunning for this high. Uh, awesome. Actually, on the long side, because of this channeling activity, you had a very good reason not to go for the previous high as a target, but to target even a little bit more aggressively. Let's say if this is your channel, very roughly, guys, you don't have to be very exact, but if you enter, for example, here with 78% retracement, instead of exiting here because you're still in the middle of the channel, well, exit somewhere around here. As you see, price rarely reversed immediately. Uh, there were some small dojis, small candles like this one, small dojis, some candles like this one. Um, you can use the channel. Also, you can use some 10 EMA for trailing stops or whatever. But 78% retracement in S&P specifically just works very well. Uh, I haven't seen any other market where this works so well. Here 78, stop around here, wait for confirmation if you wish the pin bar was on, and off you go. But 78% retracement also works very well in Bitcoin. Offers really good risk to reward. 1 to 3, 1 to 4. If you want to trail a little bit on the long side, even more, but chance of being stopped out is greater. So folks, this is it for the moment. Look for the 78% retracement in S&P. Really, this is the market where I see that this Fibonacci level being respected a lot. And even if you forget about the esoteric nature of Fibonacci from time to time, just observe what's happening around the 61, 78% retracement level. Is just offering you excellent risk to reward. And some additional area for confluence to look for, because it happened multiple times here. When you have a channeling market, stochastics, the good old stochastic is really doing miracles. It's not working good in trends, especially except if you look for some divergences. But in channeling markets, it's showing you tops and bottoms fairly well. See here in the overbought zone, you had this high. Okay, here you still were not in the overbought zone. You had this huge congestion, but this bar here licked the overbought zone a little bit. This definitely was an overbought zone. So you see in channeling markets, stochastics is, especially on the longer time frames, fairly good to indicate you the reversal points. That's why I'm not so strict on where the trend line is. It's just some zone of interest. I also have my moving averages supporting it as a dynamic resistance. So more or less, if I see the price going between the 55 and 89, I know it's overextended already, even before the stochastics. But if I want to look for confluence, guys, see how many times it indicated the turning point. We were here in the overbought zone. Stochastic was here, almost there. Here definitely overbought zone. Here definitely an overbought zone. Uh, this was a very good, that was very good example because of actually divergence as well that formed here. We had this divergence. I'll cover this in another video. Even here, that was overbought for a while, but in the middle of the channel, so not interesting for me at all. That was awesome example how the channel holded up. That was awesome example, you know, near the channel line. Uh, I know I have the benefit of the hindsight. I know it. I know it. But sometimes you have to observe these things in the market and observe them regularly. So the next time when you see them, you believe in them. For example, the next time when you see, hey, that might be a channel. I have one to some kind of 3 points, 40 is here. Stochastic is deeply in the overbought zone. Maybe it's 61, 78% retracement of this move, it's confluence with Fibonacci, exactly 61. And volume is pretty high, and I have a pink bar. Guys, these are 4 or 5 things that are lining up, and this pink bar is happening from 89 EMA, 89 or 100 EMA, whatever, these lines serve as dynamic support and resistances. These are areas of interest. It cannot get better. Get 4 or 5 confluences like that, and you have a good reason to go long. This is not the spring setup I trade, purely showing you the power of the 61 and 78% retracements in S&P. I'll double check it in Bitcoin someday for you because in Bitcoin it works like magic as well. Yeah, apply good risk to reward. No trade is certain at all. No 100% trades like many people try to portray them. With 1 to 3, guys, if you make 40, 50% success rate, you're a winning trader. If you get all these confluences that I'm lining up, I believe you can be much more successful than that. But in trading, if you get 60% hit rate, you're already lining up there next to a lot of pros. Forget about 80, 90, 100%. Get something with 1 to 2 risk to reward with 50, 60% hit rate, and there you have your edge. Then, if you perfect your setup and you have that hit rate, it's all a matter of conquering yourself, your mind, and to have the ability to execute over and over and over again, because your edge is in the numbers. It's never in a single trade. So even so that I showed you that this might be a good trade, I have no idea if that's gonna work out. It might work out, it might not work out. But I know that if it works out and it comes to here, I'm going to win 3 times more than I risked, which is fine, for my strategy. Okay, hope you liked it, folks. Stay in touch with the blog. I'll share this video in springhunter.com. Take it lightly, take it as a idea generation blog where you can read what another person is doing. I'll share, I'll try to share fairly regularly, depends on my schedule, but I hope you like it and I hope it's useful for you. Happy hunting, guys. Enjoy the day. Bye.